Hey guys, Brad here, and welcome to an introduction to Elliott wave theory. I'm going to try to breeze through this. I'm not going to get bogged down with too many details. I'm going to keep it very simple. And by the end of this video, you are going to understand how to hunt and measure for a 5-wave impulse. That is a distinct, classic, foundational wave of Elliott wave theory, the 5-wave impulse. So let's start by getting into how did Elliott wave theory even get its name? All right, so there was a guy named Ralph Nelson Elliott. I'm not going to read this for you. You can pause the video and check this out. I am just going to talk about one very interesting facet of this guy's life. So he was a talented businessman. He was a business consultant. He was an accountant, a bit of an economist, and a market observer. And the US government tapped him to be an economist and an accountant, and they sent him to Nicaragua, Central America, where he contracted a horrible bacterial virus that actually infected his heart. He suffered from an enlarged heart, and the doctor ordered him to bed rest, and this went on for years. What he ended up doing was going back over about 75 years or so of market data and just studied the market patterns over and over again until he started noticing certain patterns that were recurring in the work. So he started documenting them and he started categorizing them. And over a period of time, the predictive quality of his work uh, started to become apparent. And he actually got some popularity, became published, moved back to New York City, and the rest is history. So, one of the major takeaways from his work is the overall theory behind the method. Now, I'm not going to read this to you, but I'm just going to point out the very first sentence. I'm going to read this part, and then we're going to talk about this word endogenous. It is the cornerstone of the Elliott wave theory. So, Elliott wave theory postulates that social mood is driven by unconscious and endogenous forces and fluctuates in repetitive fractal patterns. Elliott wave theory postulates that social mood is driven by unconscious and endogenous forces. Let's take a look at the word endogenous. Based on a biological view of the word, growing or originating from within an organism. In terms of psychology, not attributable to any external or environmental factor. So, really, what Mr. Elliott was suggesting, which is rather provocative, is that these market waves are not a result of external forces, they are endogenous. What the heck? So, really, what he is saying is that the universe operates in a certain way and that price waves operate in a similar way. Now, let's cover that just a little bit more, and then we're going to move on and get right into the technical aspect of Elliott wave. So I'm not going to read this to you, but I want you to pause the video and read this because this is very important. One thing that I will talk about that's in here is the idea of fractals, and that just means self-similar at scale. So if you look at the third bullet point down on this list here, advancing and declining price patterns form distinct and repetitive patterns that are self-similar at scale. This market feature highlights the fractal nature of markets. Well, that is a humongous piece of information because being self-similar at scale suggests that if you see a certain pattern at a very large scale, and what Mr. Elliott observed is that if you take a 50-year chart, a multi-decade year chart, and identify certain patterns in that particular chart, as you drill down onto the smaller and smaller time frames, you are going to observe very similar patterns on the much smaller time frame that are reflective of the larger pattern. This is important, and you're going to find out why in just a minute as we continue on right to the doorstep of Elliott wave and understanding the basic 5-wave structure that markets are based upon. Now, I'm just going to keep it very simple for the purposes of this introduction video. A motive wave is simply a wave structure that moves in the direction of the larger trend in 5 waves. We call this an impulse. This is a 5-wave impulse. So when we say a wave is impulsive, a lot of people use that word, but in the Elliott wave context, when we say a move is impulsive, we're suggesting that it is a 5-wave impulse. And following a 5-wave impulse, it is typical to see a correction happen in 3 waves. So the Holy Grail, the biggest, most clear clue we can ever find in Elliott wave is a 5-wave up followed by a 3-wave decline. And this pattern right here, you're going to see it at every scale. You're going to see it on a weekly chart, a monthly chart. You're going to see it on a 1-minute chart. Yes. Now, everything doesn't follow this pattern exactly. In some cases, doesn't follow it at all. But for the purposes of this video, I want you to understand this basic 5 up, 3 down pattern before we even attempt to learn anything else. This is the cornerstone. This is the bedrock. This is your foundation. This is your fundamentals. Okay, so the basic gist is a motive wave is a wave that moves in the direction of the larger trend. An impulse 5-wave move is typically followed by a 3-wave correction. We call it a corrective wave. We call it a correction. We call it a 3-wave pullback. You call it a retrace, whatever you want to call it. After 5 up, we are looking for a 3-wave correction. Now, here's the beautiful thing that Mr. Elliott discovered. He started measuring these price waves and he noticed that they typically fall along Fibonacci lines. They actually have relationships. Certain wave structure has a relationship to each other based on Fibonacci ratios. Well, this is again wildly helpful because now if we're suggesting that, first of all, things are self-similar at scale, well, my goodness, if you can measure for certain wave types, and if they're self-similar at scale, we're going to know where to look for certain Fibonacci ratios. Knowing where to look for certain Fibonacci ratios. Also, it gives us a great context through which to view the market. And I must say, it's a very unique context that you will not find anywhere else besides Elliott wave. So let's talk now about Fibonacci and add some Fibonacci measurements onto this chart. So here is the same 5 up and 3 down pattern. In this instance, I've added the Fibonacci ratios. So a wave 2 typically targets the 618. Now, I'm at the part in the video where if you want to take some notes, this is a good place to do it. Rewind the video, pause it, write a few of these things down. I'm giving it to you real simple. I'm only going to give you 3 or 4 things today. So it would probably benefit you greatly to write them down like in a notebook and just keep that as your Elliott wave notebook. And as you go along and take notes, you're going to be able to practice this. That's my goal, is to get you actually performing Elliott wave on your own charts. And we're going to get to that before this video is over. Okay, but for right now, let's just explain the concept of how the Fibonacci ratios apply to a 5-wave structure. For a wave 2, we're looking for the 618 region, not the exact level of a 618, but we are looking for the region of a 618. Now, I happen to know for a wave 2 can terminate anywhere from the 382. In some cases, it can go very deep, all the way down to the 764. In my experience, in general, I like to use the 618 as the general anchor region within the zone to see a wave 2 come down and at least have some relationship to the 618. Okay, so that's your first ratio, is wave 2 targets the zone around the 618. Okay. The next fib I'm going to give you is the target for wave 3. After wave 2 comes wave 3. Wave 3 is often the longest and most powerful wave in the 5-wave structure. And specifically, wave 3 often targets the 1618. Now, I'm going to tell you more about exactly how to arrive at this 1618, how to create these fib structures on your chart. I'm going to get to that in a minute. But right now, I just want you to understand what the general targets are. So for a wave 3, it's going to be the 1.618 region. Now, for this example, I'm putting these ratios exactly on the end of these waves just to make it easier to illustrate what I'm talking about. Please do not misunderstand these ratio levels as exact level targets, because they are not. They are zones. There are a lot of variables. These are guidelines, okay? Very important. So a guideline for a wave 3 is to target the 1.618. A guideline for the wave 4 is for it to target somewhere between the 236, the 382, and in some cases even deeper. I like to add the 50%. I kind of blink that one on and off on my charts, but wave 4 is going to target between the 236, 382, and 50% fib. In general, the character of a wave 4 in general is going to be shallower, more shallow, less deep than a wave 2. Wave 5 coming after wave 4 finally bottoms and you get an impulse move higher, targets typically the 200 fib zone. Okay. So I've just given you four Fibonacci ratio levels to pay attention to. And that is wave 2 targeting the 618, wave 3 targeting the 1618, wave 4 pullback targeting roughly 236, 382 zone, and wave 5 targeting the 200 fib. Okay, you notice what is coming after this 5-wave move is a 3-wave retrace. It is worth noting that the impulsive 5-wave structures are labeled using numbers and Roman numerals, a combination depending on what degree we are in. I'm going to cover degrees in another video. For the purposes of this video, we're going to keep it real simple. The 5-wave impulse is delineated with numbers and Roman numerals, and the retrace or 3-wave correction is delineated with letters, either capital letters, small lowercase letters, circles, no circles. We'll get to that later when we cover degrees. Now, it's worth noting, since we're on this chart right here, do you see how this wave 2, I'm teaching you, targets the zone around the 618 for a wave 2? Well, the larger structure also gives you a 3-wave retrace, and that also should target the general zone of the 618. This is the perfect example of a fractal. Now, I'm going to move to the next slide because you're about to see the internal structure. Before I show you that slide, this is going to blow your mind. This is really going to show you what the fractal nature of markets is all about. So just keep this image in your mind. 5 up, 3 down. Okay, ready? Here it comes. Bam. Now, what we have here might look like a total mess to you, but what this is all of the waves inside one complete structure. We're going to call it 5 up and 3 down. That is the general structure that is pervasive throughout markets on very long time frames, on very small time frames. The 5-wave up, or it could be down in a bear market, 5 down, 3 up. But for the purposes of this example, I'm using a bullish example. So 5 up followed by 3 down. And because it's fractal, let's dive into the smaller degrees and really show you what fractal means and what it's all about in terms of price waves. So First thing I want you to do is orient your eyes to this is wave 1, this is wave 2, this is wave 3, this is wave 4. I recommend going to large screen, by the way, full screen, just so you can see the detail a little better. And this is wave 5. Now, inside of wave 1 and inside of wave 3 and inside of wave 5 is another 5-wave structure. So, in a 5-wave structure, in a 5-wave impulse, waves 1, 3, and 5 are composed of 5 waves. What? Let's go back. So, in a 5-wave impulse, wave 1, wave 3, and wave 5 are composed of 5-wave impulses. Following the wave 5, you get 3 down. Guess what? Inside of the pullback, the correction for wave 2 and for wave 4, we can reasonably expect to see a 3-wave structure. So I'm teaching you 2 things right here about Elliott wave. Thing 1 is we are talking about Fibonacci relationships between these waves, between these pullbacks, between where wave 3 typically tops, where wave 4 should catch support, and where wave 5 could be reasonably expected to top in a Fibonacci ratio at the 200. Well, in addition to the Fibonacci, it is also the structure of price. And what I mean by that is quite simply wave 2 and wave 4 should be composed of 3 waves because they are pullbacks, they are retraces, they are corrections. So let's look at wave 1 again. Wave 1 in purple, I really want you to be full screen so you can see these details. Wave 1 in purple is composed of 5 waves in green. After 5 up, we get very typically a 3-wave correction, which is letters is what delineates the corrective waves. So 1, 2, 3, 4, 5 for wave 1 of the next higher degree. Then inside of wave 2 in purple down here, it's going to be composed of 3 waves delineated by letters A, B, C. After wave 2 bottoms, we're expecting to be in wave 3, which can also reasonably be expected to be composed of 5 waves. 1, 2, 3, 4, 5 in green. Then we look for wave 4 also to be composed in 3 waves because it is a corrective wave. 1, 2, 3 shown with letters. And then for wave 5, it's going to be another 5-wave structure. This entire 5-wave structure and its internal components all add up to another wave 1. This is a bullish example. I've seen this exact pattern play out over and over again. And at the larger degree, you can find patterns like this that go on for years. Am I trading that way? No. Is it worth knowing? Absolutely, because it's the context of knowing where you are in these Elliott wave structures that gives you an edge regarding knowing what to reasonably expect next. So that is really the magic of Elliott wave. It's really more about the parameters than it is about the prediction. It absolutely has a predictive quality, Elliott wave does, but it's the parameters that I find most valuable. All right, so now that I've shown you this entire 5-wave structure up for wave 1, well, we know after a 5-wave structure completes, we are looking for a 3-wave retrace. And that is what this wave 2 is. And inside of the wave 2, we have an A. This is red letters, A, B, C. A, B, C for wave 2. And inside the wave A is very often a 5-wave move. It can be a 3-wave move, though. A waves are variable. Wave B is also variable. Corrective waves in general are variable, but the overall structure should be reasonably expected to be in 3 waves, internal wave structure notwithstanding. The overall structure should still be visibly resembling 3 waves. Okay. Now you can go back. I want you to go back and pause this video, take some notes on those things, and just remember the 2 basic concepts of Elliott wave in terms of developing your edge in the market is going to be Fibonacci, and it's going to be the structure of these waves. Meaning, is it 5? Is it 3? Are you in a corrective mode? Are you inside of a larger impulsive wave 3, so you're expecting it to be in 5 waves? It's all about how these things subdivide and the internal structure. But just like the way a trader uses candles to look at the long time frame and then drill down, with Elliott wave we look at the larger degree and then we drill down into the smaller degree, because if we know what's going on at the larger degree, that gives us context and wonderful clues to know what to reasonably expect as we're trading down in the lower degrees. Just like the way a guy trading a 5-minute candle chart, if he's good, he's looking at a daily candle chart, a 4-hour candle chart, a 1-hour candle chart, a 15-minute, all the way down to 5-minute or even lower. It's about the context. Okay. So now what we're going to do is I want to take a look at an actual price chart. We're going to take a look at gold, and I'm just cherry picking a wave structure from just a month ago. And I want to show you guys exactly how to take your measurements for a 5-wave structure and consider the wave 2 retrace and the wave 4 retrace. I'm going to show you literally how to measure for those waves and identify those structures. Okay. Now I'm trading using trading view. And so what we're looking at here is gold. And let me hop over to, here we go. So in this example, we just finished an A, B, C correction. Okay. And after in this context, because I understand the broader context of where gold is, I'm bullish. I believe this had already completed a 5-wave move up. We got a 3-wave correction, which I labeled A, B, C. And then I am looking for a small degree, 5 waves up for wave 1. And one of the ways that we do that is by just looking at the structure, but also measuring using Fibonacci. So in this example, we look for 5 up on a smaller time frame. And dare I say, this resembles 5 up. Please go to full screen if you're not already in full screen, because I want you to be able to see these levels clearly and still see the context of the overall degree. So to measure for those Fibonacci ratios, the first thing we are going to measure is this pullback. So this, we are going to consider this 5 up. And once price starts pulling back and fails to make another high, that is when I immediately start measuring. Now, the first measurement I'm going to take is using a fib retracement tool. So really, whatever platform you're using, you want the retracement tool, and I turn the magnet on. This retracement tool on any platform is going to give you 2 clicks. The first click goes on the swing low. The second click goes on the swing high. Then what I like to do is turn off the magnet. I like to go back to the swing high. Now, keep in mind, I'm trying to discern where this low might terminate. So I'm going to take the swing high, which is 24.49.40, and I'm going to drag it over because I want to see where this low price is touching on the Fibonacci measurements. So for this example, I'm going to use my template. And I've got a template already set up for the 618 to the 886, which is a standard target region for a wave 2. So as you can see, I move this over, and where did this price terminate? It just exceeded the 618 with a wick. It immediately got rejected and kept going. So at this point, I'm thinking, yeah, And before this even came down there, my tool, this zone was already there. I had put it there waiting for this, and I had put this box, my buy box. Now, people that follow me in the trading club took this trade, were aware of this trade because I publish these charts all the time. This was a buy box based on the context of this being a correction looking for a 1-2. So then what comes next is a wave 3. And because we know the internals of a wave 3 should also be constructed in 5 waves, you can see that here. Now, this is kind of a shallow wave 1-2, followed by 3-4, followed by 5. So 5 up, but we're going to measure for that in a second. But I think this is 1-2-3. So if this is wave 4, it should hold somewhere between the 2-3-6 and the 3-8-2 fib. Okay, I'm gonna talk about our Elliott wave rule in a minute here. You can definitely want to write this in your notebook along with these fib levels. I'm going to come back to the rule, and I'm going to mention it. It's one of the few hard and fast non-negotiable rules. There are only a handful of non-negotiable rules when it comes to Elliott wave. Most things in Elliott wave, it's more about the guidelines. Okay, so the way you measure for a wave 4, you're going to grab your fib retracement tool again. And you know what I'm going to do to help you guys? Actually, I'm going to help you out here because this is an educational video. I'm trying to keep it as brief as I can. Elliott wave is a very deep topic. Any one of these little topics that I'm covering, I could easily spend an hour on and take it apart and teach you a lot of stuff about, but I'm keeping it simple. So I'm going to give you a cheat sheet. 1, 2, 3, 4, 5 is the structure. When you're measuring for a wave 4, the way you do it is you grab your fib retracement tool, you put the magnet, turn the magnet on, you put it at the bottom of wave 2 for the first click, you put it at the top of wave 3 for the second click. Then I like to turn off my magnet. So that's 250280. I'm going to drag this over because I want it to, really what I'm trying to measure is this low right here. So I want this to be in the position to capture that. And I also like to keep my charts clean. So the first click at the bottom of wave 2, which is 2415, I'm going to drag it over because I want to get it so the low of that wave 4 is going to show up in my measurement. So now I'm going to go back to my trusty template, and I'm going to select wave 4 fibs, which there they are, the 236, the 382. And quite often I like to turn on the 50% fib, but in this case, I just leave it at the template. And you can see wave 4 terminated right in between the 236 and the 382. And it also is in 3 waves, 1, 2, 3. Same with the wave 2, 1, 2, 3. And once this has terminated, you want to see an impulsive move higher in 5 waves to finish off wave 5. And that's what we got. Now, these ratios are wild inside of this wave 5, but it is still 1, 2, 3, 4, 5. So this 5-wave structure meets all the criteria of a standard impulse. There's not a thing wrong with it. It measures well using the Fibonacci ratios that we talked about regarding these pullbacks. Now, what we didn't measure for yet, what about the ratio for wave 3? The way we're going to measure for that is we're going to grab a different tool. In this case, we're going to grab the trend-based fib extension tool. Now, on your platform, it's certainly going to have the word fib in it and extension. You want to grab the fib extension tool. This tool, unlike the retracement tool, this tool is going to give you 3 clicks instead of 2. So where we want to put those 3 clicks is the swing low, which is the end of the previous correction. That's click 1. Click number 2 is going to go on the swing high, which in this case is wave 1. And the final click is going to go at the bottom of wave 2. Boom. Now I'm going to go turn on another template that is called standard pinball. That's our nickname. The guys that I learned Elliott wave from, they affectionately call these Fibonacci ratios pinball, how price pinballs between these fib levels. So you can pause the video, set up your fib tool. This is the most basic fundamental Elliott wave ratios here. There are many others, but for the introductory video, I'm going to keep it this simple. And yes, I cherry picked this example. It is true that you're not going to find this. Every 5-wave structure is not going to look like this. They're all going to be different. They're like fingerprints, unique, but generally the same. So, if I showed you a picture of anybody's fingerprint and said, "What is this?" you would say, "Oh, those are fingerprints." But you would have no idea whose they are. But that's kind of the idea. These wave structures are similar, but they are not identical. They are all unique. So where is the 1618 that I've been talking about? Let me just get rid of this. Try to keep it simple for you. There's the 1618. Well, look at where this candle for the original wave 3 came up and banged into it, almost to the penny. Got rejected. Then it wicked above it. The point is, it failed at the 1618 and it got rejected. But at that exact level, no, it's a zone. It's a zone. It got rejected. Then it came down in 3 waves. That's when you start measuring. I'm always measuring. I probably measured the top of this, thinking maybe that's the top of wave 1, and had this tool over here. But then it didn't work. It kept going higher. Okay, so I moved the tool up to the top of that, but then it did work. I probably wouldn't have measured this one because it's so small, but you're going to get really good at measuring stuff. And I encourage you to always, always, always measure, constantly measure. You're going to get really good at this over time. So this wave 3 terminated at the 1618, gave you a 3-wave correction, caught support where you thought it should as a wave 4. And then we got an impulsive move up. And where did this terminate? It only wicks above the 200 fib. Only wicks above the 200 fib, and it got rejected. Look at this candle. So if you're an experienced Elliott wave practitioner, you have context because after 5 waves, and if you traded this successfully, you're going to be able to use a wide stop and build into a short up here and look at what you would have captured had that happen. Good gracious. Okay, so I'm not going to make this video any longer than it needs to be. Hopefully by now, at this moment, you feel like you understand what a 5-wave, 3-wave correction is, and you know how to measure it using your fib tools. You know what is reasonable to expect. Okay, I'm going to give you the rule now, the one rule that I was talking about. I'm only going to give you one rule at this moment, and that rule is regarding the wave 4 pullback. Wave 4 pullback may not encroach upon the price territory of wave 1. I'm going to make the top of wave 1 this very thick red line so you can see this is the price level of the top of wave 1. And I put a line there because at no point can wave 4 extend and get below the top of wave 1. If it does that, this is not a standard 5-wave impulse. It is something else. And we will cover that eventually in these videos. But for right now, when you're hunting a 5-wave structure, wave 4 may not get into the price territory of wave 1. So that is a fantastic rule to know. Fantastic rule to know, because as long as you stay above the price territory of wave 1 and you have a 3-wave structure, you're going to have a better chance of getting into a long position to finish off wave 5. But if price starts coming down in what looks like a 5-wave structure, don't go long. Wait, do nothing. So again, the clues are wonderful. You're getting clues with Fibonacci and you're getting clues with the overall structure of price. So let me end this video by hopping on back and look at that graph one more time, the graph that shows the fractals, because what I want to show you and really make it hit home, now that I've shown you a 5-wave structure, look at this part down here. Remember we said wave 1 should be composed of 5 waves? Well, the same rule applies regarding wave 4. Even in this tiny nanostructure, you do not want to see this. If you're trying to figure out, have we even made a wave 1 yet? This 5-wave structure on the tiny scale is still going to adhere to those Fibonacci relationships. Think about that for a second. Once you understand this entire 5-wave structure, the shape of the waves, the Fibonacci ratios that you're looking for, once you determine, oh, this was 5 up on a small scale, and it did respect the rules, and it did generally follow these Fibonacci zones, well, then you can look for a 3-wave correction. And then once a 3-wave correction terminates, now you're looking for a 5-wave impulse again. So knowing where you are in these wave structures and knowing where you are based on those Fibonacci ratios is going to give you an edge in the market. Okay, I'm done. I hope you enjoyed this video. I sure did enjoy doing this for you guys. If you like what you're seeing and you want more, go ahead and subscribe. Hit the notification bell so you'll be made aware when I make another video, and I will. I'm also doing analysis videos. If this is your first time watching this video, if you got value, hit the thumbs up. Subscribe. You'll be sure to get the next one. I really got to say this. Thank you to all the guys who have bought me a coffee. I can't tell you what that does for my morale, my spirit. You guys keep me motivated to keep doing this, to keep teaching, to keep sharing what I've learned. I put in over 10,000 hours on LA Wave for sure. I've learned from the best Elliotticians in the world. I'm still learning every day. I'm still refining my approach. And the more I share and the more I teach with you, the better I get, the better I get it at myself where I'm at on the advanced level, because I'm breaking it down to keep it very simple for you. There's a lot more to this. We're just getting warmed up. So thanks for buying me coffee. Thanks for the thumbs up. I appreciate you guys. And I'm already looking forward to making the next video, which I will. And in the meantime, you're going to get analysis. All right. Thank you for watching, and I'll see you on the next one. Bye-bye.